Hi, and welcome. You're listening to the X22 Report. My name is Dave, and this is episode 902A, and today's date is February 24th, 2016, and the title of the episode is More Countries Are Turning to Their Own Currencies as the U.S. Economy Disintegrates. Let's get right into the economic collapse financial news. Now, today we had a wild ride on the stock market. I mean, we see Asia. The markets were down there. Europe, they were down. Here in the U.S., they started out way down in the red. And we see that certain agencies like the high-frequency traders, the plunge protection team, they were able to push this market into the green. Gold started to rise. They suppressed gold a little bit. Gold is still up. Gold is in the 1,200 plus range at this point. And they're getting very nervous because gold continually moves up. If you know, it makes huge swings up. But they need to keep the illusion alive that everything is fine, because the real economic indicators, the data that's coming out, not the manipulated unemployment, GDP, inflation, and all the others that the government can manipulate. I'm talking about things that we can really put our hands on and we can actually see and understand without the government getting involved. Now, sometimes they do get involved and they try to manipulate all these numbers. But eventually what happens is we can see through them and we can see what's really going on. Just like unemployment, where they're counting 1, 2, 3 part-time jobs as all full-time jobs. And once those people are laid off from their part-time jobs and they're not working at least 30 hours, and it's different in different states, they're not considered being laid off and they can't collect unemployment. So that's kind of one-sided. Those people who've given up looking and have fallen off, even though they're still looking, they're just not counted. They still want a job. They're just not counted. The housing market right now is a complete disaster and mess. We're seeing the prices are starting to come down now. We're seeing new home sales. They have collapsed the most since 2009. They were expecting only a 4.4% drop, but it came crashing down to 9.2% in January. This was horrific. We're also seeing prices. They have tumbled from $295,800 to $278,000. This is the lowest since April 2014, down 4.5% year over year. And we're starting to see that the inventory fears have disappeared, with months supply surging from 5.1 to 5.8%. And remember, the housing market, they were able to artificially create this bubble by having the banks keep the foreclosures off the market, having investment companies, hedge funds come in with cash, purchase homes, and a lot of these hedge funds, investment companies, they don't buy 1 or 2 homes. They buy thousands at a time. And they keep them. They try to rent them if they can. And once you keep the inventory off the market and you have companies purchasing homes, it gives the illusion that the real estate market is doing really well. But when you really look at what's going on here, the real estate market hasn't moved. Now, they can do this in certain cities and they can really jack up the prices to make it look fantastic. But in reality, as we're seeing right now, it is all starting to fall apart. Now, to bring more people into the market, they're continually creating these scams of mortgage type of programs to get more and more Americans into the market. And if you notice, they need to continually lower the down payment amount. They need to get rid of the private insurance. They need to keep the interest rates very close to zero, just to have people purchase a home. But guess what? It is not working whatsoever. And what we're seeing right now is everything starting to fall apart. We're starting to see the U.S. Services PMI. It has collapsed. It is in contraction right now at 49.8%. And this was below, way below, expectations of 53.5. Even market, they're admitting that slumping business confidence and increased downturn in order book suggests that there's worse to come. What we're seeing right now is all different sectors of the economy, they're falling apart. This is the last leg of the U.S. recovery stool, and it just broke. The U.S. manufacturing PMI, the U.S. services PMI, they are declining very, very fast. We are in a downward trend, and we are approaching 2008 levels at this point. We see the Baltic Dry Index. It is bottom bouncing in the low 300s. It is up 4 points to 322. Not really moving anywhere. Do I consider this a recovery? No, because 322? A complete disaster. Now, I know everyone, the corporate media and other financial talking heads are out there saying, oh, don't worry, it's all going to come back. We see the Baltic Dry Index rising. It's on the, it's been rising for the 10th or the 11th session in a row, whatever one they want to use. But what I'm seeing here is it looks like we're going to be coming into a new normal. And they're going to try to use this to say, this is what a recovery looks like. Because with the housing market, where it didn't go anywhere, they said, no, this is what a recovery looks like. We're supposed to be this low. We're supposed to have no sales. This is what it's supposed to look like. With the Baltic Dry Index, I wouldn't be surprised if we level off between 300 and 450 someplace and say, this is the new normal in a recovery. Because this is what they do. They try to convince us that this is normal now, and this is what we can expect. But guess what? This is not normal. You're not supposed to have millions of people looking for jobs in a recovery, in an economy that's doing well. You're not supposed to have stores after a holiday season announcing they're closing down if the economy's doing well. You're not supposed to have all the manufacturing jobs move into waiters, waitresses, and bartender jobs. We have 1.5 million manufacturers losing jobs, and we have 1.5 million bartenders, waiters, and waitresses gaining jobs, and that's coming to an end. So all of this is not normal. This is a situation where the economy is ripping itself apart and collapsing. And you wouldn't have the government coming up with all different ways to allow students to pay back their student loans because they can't find jobs based on their income. Think about that for a second. Oh, you can get that part-time job and you're making $15,000, $20,000 a year. We'll just base your student loan payments on that income, even though you spent, $90,000 to go to college, or $110,000 or $200,000 to go to college. This is not normal in a recovering economy. Now, why is all of this happening? Well, we have to go back to the cause of all this, and that is the Federal Reserve. And the Federal Reserve, they are separate and apart from the government. It is a private corporation, and they're handling and dictating and loaning money to the government with interest. And this is our main problem, because this corporation is not for the people. It's for themselves. And we would like to think that we have a government of the people, by the people, for the people. But the truth is that an unelected, unaccountable group of central planners has far more power over our economy than anyone else in our society. The Federal Reserve is independent of the government. They can't even audit them because they have so much power and so much pull that they're always able to get around this. And people can't even order anything from the Federal Reserve asking for documentation. using the Freedom of Information Act because they're not part of the government. And the Federal Reserve, it's broken down into 12 regional Federal Reserve banks, and they're organized much like private corporations. 100% of the shareholders of the Federal Reserve are private banks. Guess what? The U.S. government owns 0 shares. The Federal Reserve is not an agency of the federal government, as we know, but it has been given the power to regulate banks and financial institutions. According to Article 1, Section 8 of the U.S. Constitution, guess what? The U.S. Congress is the one that is supposed to have the authority to coin money, regulate the value thereof, fix the standard of weights and measures. So why do we have the Federal Reserve? What benefit is the Federal Reserve giving to the people of the United States? There is none. Actually, if you look at the U.S. dollar, it says Federal Reserve Note. Well, in the financial world, a note is an instrument of debt. And that's what we have right now, an instrument of debt. Now, the Federal Reserve determines what levels some of the most important interest rates in our system are going to be set at. But in a real free market, the free market's supposed to determine this, not the Federal Reserve. Do you know the greatest period of economic growth in U.S. history is when there was no central bank? The Federal Reserve is designed to be a perpetual debt machine. It's to trap countries. Since the Federal Reserve was established about 100 years ago, the U.S. national debt has gotten more than 5,000 times larger. And what's very interesting, and maybe a lot of people don't know this, when the Federal Reserve came into being, the federal income tax was established the exact same year because they needed this to pay off all this debt. This is all part of the same system. Since the Federal Reserve was created, the U.S. dollar has lost 98% of its value. Since President Nixon took us off the gold standard, the dollar has lost 83% of its value. So, what do we know about the Federal Reserve? We know that we don't need it. It doesn't give the people anything. Actually, it takes away their wealth. It strips them of the purchasing power of currency. And our founding fathers, they warned us of this. Actually, Thomas Jefferson once stated that if you could just add one more amendment to the U.S. Constitution, it would be to ban all government borrowing. And I agree with that. So Congress does have the power to shut down the Federal Reserve at any time. But right now, most of our politicians fully endorse the current system. And unless we make a complete change, this system is going to stay the way it is. Now the question is, why would they endorse this system unless the Federal Reserve somehow, some way, is giving these government officials, government employees, free money to keep them in line? Because why else would they keep them? What would be one of the reasons? There are no reasons. The only way and the only reason they would stay is for payoffs. That's it. Now, Russia has increased its gold reserves another 700,000 ounces. And we realize that the BRIC nations, they are talking to each other, and they're making deals with each other, and they're starting to use their own currencies. Moscow is making deals with New Delhi. They're creating a roadmap for mutual settlements and national currencies. and they're going to bypass the dollar completely. And they're saying most of the other BRIC nations are ready to do this. So we're seeing a lot of nations right now. We know that China, Russia already do this. We know that China has been setting up bilateral trade agreements all throughout the country, setting up hubs. And we're starting to see a lot of countries now not using the dollar. For example, Iran, they're going to sell their oil using the euro. Most likely this will be temporary. And then they'll move probably into the yuan and ruble. And they'll never use the dollar. And this is going to be a problem for the central bankers. Because what's going to happen now is as more and more countries decide to dump the dollar, countries will not have to keep the dollar in reserves. The dollars will come back to the U.S. and we'll see a flood of dollars which will devalue the currency, which in turn will be hyperinflation. And this is where we are headed. Listen, everyone, thanks a lot for listening. Be well, be safe, and especially be prepared. Thanks a lot.